and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Bitcoin stabilizing after tumbling around 30% since October in a pretty volatile start to the month. Let's bring in AirAsia, our senior editor for digital finance. Anna, thank you so much for joining us again. Yesterday, we were talking quite extensively about the sell-off, the Bitcoin sell-off, taking a little bit of a pause. What does that indicate?
It could be the beginning of another drop. We're not sure. I guess they're just crypto seems to be following sort of macro indicators a bit more. You know, it tends to follow whether people are more risk averse or not. What investors, if they're risk off, then they tend to shy away from crypto. It's definitely not been an easy few months for retail investors, especially in crypto. For example, you know, many of them have been traditionally investing in stocks like Strategy, which is a big Bitcoin accumulator, and we've seen that stock drop dramatically. They had to say yesterday that they're going to set aside some money to pay dividends because people were worried that they'll have to start selling Bitcoin, which would add more pressure to the price.
So what happens at 80,000?
Then you don't know if it's going to keep dropping more and if we'll reach the lows. It's still not the lows of the year. We had a bigger drop in April, but it's certainly quite shocking that, you know, we've seen the Bitcoin lose all of the gains that it had accumulated during the year, which was a great year for crypto in general in terms of the conditions in general.
So, and I mean, the big question is basically, will Bitcoin be back to breaking new record highs in the short term? So this is our big questions, of course, on our MLive live blog. What does seem to be, I mean, this is the usual pattern. It kind of falls quite a lot and then record high again. Does it feel different this time?
So the condition, what's different is that the condition for crypto as an industry seem optimal, right? They have the support of the United States president, and so you think that what the investors have been looking for, which is support for bigger institutional buyers, is there. But in reality, what might be shaping what's happening more is just the macro, as we've been saying before. So, for example, what happens at the Fed, you know, what's happening in Japan. So we'll have to watch and see, I guess, what happens in the market in general, perhaps to know what happens with crypto. But with crypto, you never know. They might, at the end, there might be a crypto disaster that makes the price start slipping again. Yeah,
but you're right. It does feel like the asset class has actually changed quite significantly. And thank you so much, Anna Herrera, there, Bloomberg senior editor for digital finance. Now, uncertainty in some corners of the market. My next guest says the Fed will cut in December and again the first quarter of next year. I'm delighted to be joined by Grace Peters, co-head of global investment strategy at JPMorgan Private Bank. Grace, the day you start the show with Bitcoin means that there's something going on that you're trying to figure out what this, you know, whether this is a new asset class, or how do you look at crypto overall?
Yeah, so it's actually not an asset that we cover at present because of the extreme volatility, such as you know what we're talking about at the moment. But I'd just say that the pullback that we're seeing, I think, is indicative of people getting to the end of the year, assessing positions that broadly have done really well, and acknowledging that, you know, whilst we think there is a path to positive risk asset returns next year, there's also a lot of risks out there. And so some of those risks really coming in to affect, you know, risk sentiment across the board, and particularly assets that aren't connected to cash flows and therefore are more intangible to value.
I know, Grace, you were one of the first ones to also come out with your 2026 outlook. So that's done. But it still feels like it's really AI and the Fed that's supporting these markets.
Yes, I think so. I mean, look, what's most interesting to me when I look back for 2025 is how the composition of growth has changed. I mean, AI-driven capex has really been what's driven over 1% of US GDP, which means it's overtaken the consumer in 2025 as a driver of growth. Even when we look at within the consumer, it's bifurcated. You've got high-end consumers driving a lot of the spending. And so that bifurcation, I think, is interesting as it pertains to the risks. Because the first risk to me, really, over the next 3 months, is that the economy is weaker than consensus expects. So particularly when you look at youth unemployment, there's a few red flags. And so that's one of the reasons that we think the Fed will cut in December and again in the first quarter. And that certainly is one reason to push back against a consensus view that growth is going to be strong and accelerating through the first half of the year. The AI capex piece, I think, is obviously also a key risk. You know, we're not going to stop asking the question, are we in a bubble? We're not going to find out. I mean, our view is that the next few quarters, you're still seeing extremely resilient demand. Demand still outstrips supply, but the question really is not for the next couple of quarters. It's more to 2 to 3 years down the line. What does that look like? And so our answer to that is what the market's overlooking is who are the productivity beneficiaries, not just productivity, but also then revenue growth opportunities and that manifests in higher corporate margins. So when we talk risks...
And in what time frame?
Exactly. Well, I actually think the corporate margin story could play out sooner rather than later.
Okay.
I think that you could see corporate margins continue to exceed company expectations, not just from the technology sector, but from a broader swathe of sectors who are benefiting from the spending, but also from revenue and productivity enhancement. So when we talk risks, there's downside, but also upside risks, I think, for next year.
Grace, going back to the U.S. economy, I mean, you're talking about this like K-shaped recovery with the risks, especially to, unemployment for youth. But actually, how bad could it be? Because it feels like the market has completely now put to one side all the issues of tariffs and trade and even inflation picking back up.
Yes.
Could that come at the forefront?
Well, I would actually go back to the inflation argument, because I think right now, over the next 3 months, as I say, particularly in absence of data, the risk could be that the labour market is weaker than expected. Now, once we start to get into next year and, a lot of the tax rebates come, the One Big Beautiful Bill beneficiaries start to flow through and should sort of really affect all consumers, but particularly perhaps that lower end cohort, then what I think you could see is a re-acceleration of growth, and with that, a re-acceleration of inflation. So you could have cyclical drivers of inflation next year, as well as more structural ones around demographics and AI spending, which means that whilst we're talking about the Fed cutting now, by the time we get to the middle of next year, I think we need to be open to the idea of would the Fed need to raise rates through the end of 2026 or into 2027. So that's quite a complex picture to navigate. You mentioned our outlook. It's entitled Promise and Pressure. We do think the promise is going to win out. We think it'll be another good year for equities. But for many of these pressures, diversifiers, the alternative asset classes, gold, hedge funds, infrastructure, we think they're all really good components to add to the portfolio.
Grace, what do you do with the UK? So we had a big market event last week with the budget, and it seems, there were 80 measures. A lot of the market, certain pockets of the market are still trying to figure out exactly what it means for them.
Yes, the UK is often an overlooked market, and I think there are pockets of value. The budget was better than feared for many. Many of our clients are invested in UK gilts to, step out of cash and secure shorter dated income. But I think within the UK stock market as well, the banks, the mining complex, I think, is interesting because I think the capital ratios are strong. The dividend return component, again, is very interesting to clients seeking income. So common overlooked. I wouldn't say it's our favourite market, but I think that there are opportunities there.
What happens in Europe? Actually, there was the first... I had a couple of analysts yesterday saying that, again, the market is underestimating the fact that maybe the ECB doesn't move for quite some time, but then the next move up, end of next year, could be also interest rate hike.
It could. We're expecting the ECB to be on hold, but again, it depends on this profile of growth. And I think the consensus is that, particularly driven by the German fiscal spending, that growth in Europe starts to pick up in 2027. Right. But actually, the European consumer is not in a bad place. Actually, the accumulated wealth there actually is arguably more in Europe than in the US at the moment. And so if we see European growth come through a little bit stronger, more in 2026 rather than back-ended in 2027, I think that would be a positive catalyst for the European domestic economy. And it was interesting, I was in Asia last week seeing clients, and there's a real sense that actually some of the retailing in Asia is starting to pick up as well, which would be positive for European luxury, which is a sector that we recently upgraded, given that we do think, whilst there's structural issues undoubtedly in China, some of the luxury names are bumping along the bottom.
Yeah, and that's quite a stark reversal from a couple of months ago. I don't know whether it's pricing or is it just a China pickup?
I think it's a bit of both, but China is a huge part of the sentiment and obviously the growth driver as well when it comes to European luxury. So the notion that actually, Hong Kong retail sales could be improving, that people on the ground are starting to say, look, it's not so much that there's a V-shaped recovery coming out of the economy, but, people have got quite used to where they are and they know it's not going to be resolved anytime soon, but just a mild improvement from what's been a tough couple of years could be positive for sentiment, and again, in a sector that's pretty unloved at the moment.
Grace, we've certainly seen some bumps along the road for global bonds, and yesterday we had a bit of a wobble because of what we heard from the Bank of Japan. Today there was an auction, last one of the year, it was fine. How do you look at Japan?
Yeah, so Japan, we're sort of neutral rated from the equity position and similarly for the fixed income component as well. I think for the story in Japan on the equity side to do better, you need to continue to see the shareholder returns. But that's also a story in Europe, which is why we have a preference given the growth conversation that we had. And look, I still think for that scenario where growth surprises to the downside, fixed income is still going to provide support. So adding to government bonds in our mind, our duration across the book is around 6.5 years, which is longer than some of the clients that we see because we do want that inflation protection, downside growth protection, but you still need the inflation side too, which is in the old space.
What do you do? There's so much political instability and geopolitics, which we cover on the show every day, but it doesn't quite translate into the markets, maybe at the margins, into a little bit of oil?
No, so it's interesting because actually when you look back over the last few decades, obviously geopolitics commands the largest share of airtime, but actually has never really had a lasting influence. I wouldn't say never, has rarely had a lasting influence on financial markets and risk assets. And the exception is really when it hits the oil price. And so really that's the transmission mechanism. But our view is that oil is, range-bound to drifting lower because we still see a lot of supply coming. But that would obviously be one of the warning factors, and not just for the impact overall on bond yields, on risk sentiment, but obviously on the inflation picture as well would be a concern. So gold is our main commodity that we're constructive on.
Grace, does that feel strange? I mean, when geopolitics, because we did go into the year saying, look, a lot will change, trade is going to be really upended, watch out for tariffs. And now, are we in the clear, or could it come back with force?
I think we sort of think we are moving through the worst of the trade issues, in the clear, if to categorise it more broadly. Obviously, on a sector by sector, there could be small nuances, but I think that the market sort of got over the trade issues quite quickly. The corporates, whilst we're still seeing some follow through, some feed through next year, the corporates have dealt with it admirably, and again I have to think that that's also linked to some of the AI productivity benefits that are coming through, and so I think for the most part trade should be behind us, and for it to cause real concern you'd have to see something quite major that caused real issues in the system, more akin to what we had in the COVID pandemic where you had proper supply disruption rather than just the fear of a couple more % on the effective tariff rate.
Grace, thank you so much for joining us. Grace Peters, they're co-head of Global Investment Strategy at JPMorgan Private Bank. Coming up, Ukraine's president says a peace plan has been improved, but the EU has a warning for Washington. We'll have the details next, and this is Bloomberg. The conversations that matter, the insights that you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, U.S. envoy Steve Witcoff will meet President Vladimir Putin in Moscow in the coming hours to discuss the latest proposals to end Russia's full-scale invasion of Ukraine. Volodymyr Zelensky says the plan has been improved, but territory remains a sticking point.
And on the topic of security guarantees, we have concrete details from the U.S., concrete details from Europe. I'd say these are the three main topics, tracks, but also triggers. We need to be very careful here. I thank our negotiation teams. The plan looks better.
Let's now bring in Bloomberg's Piotr Skolimowski. Piotr, are we any closer to actually seeing a deal? What's the latest?
Hi, Francine. So indeed, as you pointed out, President Zelensky yesterday said that the new plan, or the latest version of it, looks much better. And it's no surprise because, when we consider the fact that the initial plan, the 28-point plan, emerged a few weeks ago, it caught everyone by surprise. It then turned out it was pretty much drawn up together between Steve Witkoff, so U.S. envoy, and Kirill Dmitriev, which is Russian envoy, with little or no input from Ukrainians, and definitely no input from Europeans, who are completely caught off guard by this one. So we're seeing some improvement. We haven't seen much of the details as such, but still the sticking points remain, and the sticking points are huge in that respect. First of all, we're talking about territories where there are certain red lines that Ukraine has, which is they are happy or they're ready to kind of freeze the front line and have fighting stop where we are right now. For Russia, that's not enough, and they want to seize the land. They want to have full control of the Donbas region, which they've been trying to capture since the start of the full-scale invasion and haven't so far. So it's very difficult to imagine that both sides will come to some kind of a conclusion unless they're being pushed to it, and clearly there is a growing push from the administration of President Donald Trump to get the deal done very quickly.
Could there be a breakthrough in today's meeting between Witcoff and Putin?
Well, Witkoff, we have to remember that Witkoff, it's his sixth visit to Russia. It's his sixth visit to meet Vladimir Putin. He hasn't met Ukrainian side, and as our reporting showed, based on the transcript of his conversation with Putin's advisor Ushakov, he clearly has been talking much more with the Russian side. So Ukraine is probably looking at this meeting with certain concern. And that's sort of behind the efforts that we've seen over the last few weeks and especially the last few days. There was a meeting in Florida between Ukrainian delegation and Witkoff to try to kind of bend his ear a little bit and try to get their point of view. So I will see how much of a breakthrough is likely. Clearly, it's not Witkoff's first time there. But at the end of the day, the question is how much Ukraine is going to agree to whatever is being put on the table, and we're still far from that.
Separately, Piotr, a third oil tanker linked to Russia has been hit at sea. What more do we know about that?
Yeah, so that's a very interesting case. We had two oil tankers that were part of the shadow Russian fleet. They were hit just last week, and it was in Black Sea. And Ukraine claimed responsibility, or at least admitted that they've been behind that. As for the last one, it was off the coast of Senegal, and we don't really know who's behind that. What we have to say is that what we've seen from Ukrainian side is they've been attacking Russian refineries with their deep strikes inside the territory of Russia, which they consider, given that how much Russia relies on oil and revenues from oil and gas, they believe that's part of it's a fair game to basically attack whatever assets they have, and it had impact. So obviously, taking it off to shadow fleet vessels, which U.S. and Europe have been trying to clamp down on with some success, but very limited one with sanctions, would probably amount to just another step in that effort to kind of reduce the revenues that Russia is getting from selling oil.
Piotr, thank you so much. Piotr Skolimowski there with the very latest, of course, on what's happening in Ukraine between Russia and the U.S. Now, here in the UK, the head of the Office for Budget Responsibility has quit after taking responsibility for the premature publication of the details of Rachel Reeves's budget. An inquiry described it as the worst failure in the OBR's history. Well, joining us now is Joe Mays, UK politics reporter for Bloomberg. Joe, thank you for joining us. So what's been the reaction to this and actually the findings of the OBR's internal investigation?
Well, I think part of the reaction has been that this felt like something of an inevitability, given how bad this failing was and how you'd expect the most senior person in the organisation to take the fall for it. There's still some question about whether Rachel Reeves might have pressure on her still as well, given the communications in the run-up to the budget that's caused a lot of controversy here so far. I think Keir Starmer really wants to move on from this budget now, and hopefully, in his eyes, the resignation of Richard Hughes will in some way draw a line under it. Now the question is, who will be the new chair of the OBR? And it is ultimately appointed by the Chancellor and the Treasury Committee. So there has been tension between the OBR and the government over their budget analysis, their forecasts. So we're waiting to see who they pick. That's where we stand.
So the Prime Minister, Keir Starmer, has also defended Rachel Reeves after she was accused of misleading the public about the state of the UK's finances ahead of the budget. Joe, let's take a listen.
So we had, on the one hand, £16 billion less than we might otherwise have had. We had clear commitments that we'd made throughout the process as to what it was we were going to achieve. Therefore, against that backdrop, it was inevitable that we would always have to raise revenue. So there's no misleading there. During the overall process, the numbers improved.
So does this actually draw a line under the budget?
Well, I think the government's account still is hard to fully accept. I think that they say that They were talking about there being that £16 billion hit from the productivity downgrade, but when they were saying that, they knew at the time that the OBR's numbers were also showing that tax receipts were going to be much better than expected, offsetting that hit. And while they did face a hole in the public finances, it wasn't of the size and scale which we were being led to believe by Rachel Reeves and the government at the time. So I think this story will continue to run and run. And I think the aim for the government now is to have policy announcements, move the agenda on as best as they can. But, you're having polling now asking questions like, does the public trust Rachel Reeves? Did she lie at the budget? This is not the post-budget media narrative the government would have wanted. So now it's a case of them trying to move it on by wanting the public to focus on other things.
Joe, thank you so much. Bloomberg's Joe Mays there with the very latest on what's happening in the UK. Now, the White House has defended the Pentagon's handling of a September attack on a suspected drug-running boat off South America. It's denying a report that Defense Secretary Pete Hegseth had given an order to kill everyone on the vessel. While spokeswoman Caroline Leavitt confirmed 2 strikes on the ship, but says the order for the second attack came from a U.S. Navy admiral, not Hegseth. And a leading Iranian human rights activist and Nobel laureate has told Bloomberg that state suppression in the Islamic State is getting worse as the country faces multiple crises, including regional isolation and a deteriorating economy. Narges Mohammadi says activists, teachers and academics are increasingly being targeted by the state, which is using the death penalty as a, quote, tool of repression.
The repression has intensified. The fact is, the executions reflect the degree of violence and cruelty the Islamic Republic has unleashed against the Iranian people. Arrests have become far more widespread and have now reached layers of society that, although always under threat, hadn't been directly targeted like this before. I see the repression now as extremely serious. The establishment's violence against its own people is a naked one. And I know people are deeply angry.
Narges Mohammadi there, who won the Nobel Peace Prize in 2023 while serving a sentence in Tehran's notorious Evin prison. She remains politically active and is a counselor for One Young World, an organization that supports young leaders. Now, the European Union plans to commit at least €3 billion over the next year to help end its dependence on Chinese raw materials. The pledge is part of a broader plan, which will also create a European critical raw material center to oversee investments and help build stockpiles. Coming up, Taiwan's foreign minister warns that the dispute between China and Japan could drag on for a year. More from our exclusive interview next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The crypto rout eases after Bitcoin fell more than 5% on Monday. Stocks remain on the back foot after a shaky start to the month. U.S. Special Envoy Steve Witkoff is due to meet the Russian president in Moscow. The EU warns Washington not to force a deal on Ukraine. Plus, Taiwan's foreign minister tells Bloomberg he thinks tensions between China and Japan could drag on for a year. So Japan's new prime minister has definitely sparked a diplomatic firestorm with China when she speculated over the potential for military action in relation to Taiwan. Our chief North Asia correspondent Stephen Engel spoke exclusively with Taiwan's foreign minister.
So we have very good communication channels with the Japanese government. So we are trying to manage the situation to avoid it's become a situation out of control. So because...
So are you saying you're downplaying it? Because
yes.
The response so far from Lai Ching-te, the president, has been fairly muted.
Yes. So we show our support through, I think, a soft approach. suggesting that our people to travel to Japan, also to eat Japanese food. So we want to help cool down the situation, because once the Chinese nationalist sentiments stimulated, it will very, to some extent, out of control. So I think for Beijing, it also not in its interest to escalate the conflict.
What are you communicating to Tokyo? Do you want them to back down to cool tensions or stand ground?
I think it's in everyone's interest to stabilize the current situation, because once Xi Jinping mobilize its society through nationalist sentiment, it's also not in Xi's interest, because the economic downturn and also the high the rising unemployment rate, and also the trade conflict with the United States. So I think it's not in everyone's interest to have the China-Japan disputes on the issues related to Taiwan to escalate.
So by not provoking Beijing, you feel, this is the way I'm reading it, you feel that this could die down sooner?
Yes, I think so.
How long?
Because I think Japan has already shown its willingness, because it's in the parliament, it's in the QA session. Yeah. So there are some backgrounds. Yeah, so it's not just a different policy change from the Japanese side, but for Beijing side, maybe it take maybe a year to stabilize the situation. But for saving Xi Jinping's face, he has to do something to show his domination in the disputes.
Stephen Engel, our chief North Asia correspondent, speaking to Taiwan's foreign minister in Taipei. Now, the UK Prime Minister Keir Starmer says the country will adopt a more pro-business approach to China, but will not trade its national security for greater trade ties. Starmer sought to clarify his government's approach to Beijing last night in his annual speech on foreign policy. Now, he said the UK needs a policy that recognizes China is a defining force in technology, trade, and global governance, while also posing a national security threat. And China's DeepSeek has unveiled 2 new versions of an experimental AI model and says it matches the performance of OpenAI's flagship GPT-5. DeepSeek says a new model performs well across multiple reasoning benchmarks, suggesting China's open source systems remain competitive with Silicon Valley's frontier proprietary models. Well, staying with China, my next guest has been investigating the competition between the world's 2 largest powers. Dan Wang's new book, Breakneck, argues that America is run by lawyers while China is run by engineers, with China's strategy fueling its economic ascent. Well, Dan is visiting the UK from Stanford and joins us now. Dan, first of all, congratulations on the book.
Thank you very much.
It's a nice read. It's an easy read, but with complicated and complex things that you are basically breaking down. So just the parameter of the book is America has always been ambitious.
Yes.
But it does feel like China is now building the future at greater speed. What's the most common misconception we have about China today?
I think that China is much more competitive than we give it credit, that this is not some sort of only centrally planned economy in which everything happens at the diktat of Xi Jinping. I think that there are these super competitive Chinese firms out there, companies like DeepSeek, which we just talked about, companies like Xiaomi, which are fighting for their lives in a very fiercely dynamic environment.
So, I mean, do they have actually a lot more support from the government? And is that a hindrance or is that good?
It is both a hindrance and it is good. It is always a yes question when it comes to China. It is full of these contradictions. Often these industrial subsidies could give a lot of benefits to Chinese firms, especially when they're looking for new land, especially when they're looking for new financing. Often it is a big hindrance because, as we know, Beijing is really able to smack around a lot of tech founders, especially ones as big as Jack Ma.
You're one of the people that understand technology in China the most. Where are we right now? So there's these two superpowers wanting to become number one. When does it get decided? Is it winner takes all, or can they compete for 15, 20 years?
It will be competitive for a very long time. There is no race at the very end of it. There is no gold medal. There's no bronze. We don't know when someone will have won, because this is a multi-dimensional race on many, many fronts, even on something like artificial intelligence. The U.S. right now has an absolute lead in the reasoning models, but as we can tell from all of these benchmarks, the Chinese are catching up in all sorts of ways. In addition, they're building out so much more power capacity in order to power all the AI. If AI is going to be all around us, it's going to be in our roads, it's going to be in my coffee, then we're going to need a lot more power. And so when the U.S. is not building enough power as much as the Chinese, it might be really at a disadvantage here.
Dan, what you argue in the book, which is very striking, is that America is run by lawyers, China is run by engineers. Does that automatically put the U.S. at a disadvantage? No, because the lawyers have advantages themselves. I'm coming to you from the U.S. West Coast, which is the only region of the world which has created not only one company worth over $1 trillion, this has created a half dozen companies worth over several trillions of dollars. That is absolutely an advantage. The lawyers are able to protect intellectual property. They're able to protect wealth. The rich feel comfortable with creating businesses in America. They're not necessarily so comfortable building big businesses in China. So given all of the geopolitics and the uncertainty with fragmentation, could you see a world where actually technology, at the moment we have this idea that actually the World Wide Web is global, that everything will be global. So again, if you have a good AI model, it will be adopted globally. Could we see the reverse? Could we see two blocks with each having their own technology? We're already seeing fragmenting. So what we're seeing is that Beijing has been uninterested in the global internet. They don't want Facebook or Twitter or any of these pesky platforms from Silicon Valley over there. The Americans are trying to de-wean themselves away from Chinese rare earth magnets. They're really trying to create their own supply chains. I think the future is going to look much more protectionist and more fragmented than the past. I mean, it was almost like 11 months ago, right, in Davos, that the week after Davos, where people heard about DeepSeek. So if you're not in the know, no one had heard of them, and suddenly they came out of nowhere and really did incredible things. Yes. Are we going to hear more from them, or are there other companies like them in China? There's many companies like them in China, and I think that what is special about the DeepSeek moment was that the prediction was, what was really interesting was the reaction to DeepSeek. I think that the financial markets had not priced in the extent of Chinese competitive firms, Chinese entrepreneurial firms that are doing really well. There are many Chinese entrepreneurial firms like Xiaomi out there. Huawei is not listed, but still a very dynamic firm. There's all sorts of firms in industrial robotics and all sorts of firms we're not hearing about. Maybe we're going to hear about a lot more of these. Because of the tariffs and trade complexity for China, are they doubling down on actually trying to make sure that AI is theirs? I think that they're trying to double down not just on AI, but on absolutely everything. And this is going to be the great challenge for the West, that China wants not only artificial intelligence as well as every big technology of the future, they also want electric vehicles, as well as their batteries, as well as the magnets. So they really want to dominate everything. And it becomes really critical for the US, the UK, other countries to figure out what sort of niches can these countries still really dominate in, because I think it will be bad for the world if China actually makes absolutely everything that we use and consume every day. Because what, it displaces U.S. companies, or because there's always the foreign affairs politics going into this? There is still a share of politics coming in, but they have the ability to displace a lot of American companies. What we're seeing is that Germany is already being pretty substantially deindustrialized by the Chinese companies, and I'm fearful that many more of these will come to the U.S. as well. I mean, there's something that struck me, I think it was like 15 days ago, Sam Altman in an interview, and then he did walk back these comments saying, look, a lot of these AI companies are too big to fail, so they could have government support or something like that. What do you make of a comment like that? Yeah, well, I think that it is definitely a double-edged sword to ask for government support, and I think that OpenAI should be careful for what it wishes for. If the U.S. government decides to nationalize OpenAI, that's not necessarily going to be very good for OpenAI. And so, what we're seeing is that Donald Trump has already turned Intel into a state-owned enterprise with American characteristics. I'm not sure that's going to be great for Intel over the longer term. But I mean, we talk on this show day in, day out about valuations. Through your research, through your book, through your teaching at Stanford, and of course, what you've been understanding. Should we worry about valuations? valuation because of simply the competition from China?
I think we should worry about valuation. The very valuations of especially AI is kind of eye-watering, even before China. And as we saw with DeepSeek, China can shift valuations pretty substantially all at once. And so I think that is always something to be very concerned about, especially with AI.
Dan, thank you so much for joining us. Dan Wang, author of Breakneck, Stanford University Hoover Institution Research Fellow, and of course you're up for an award this week, so good luck.
Yes.
Now, China's top-down AI strategy sets the country up to achieve large-scale deployment that the U.S. will struggle to replicate. That's one of the findings of a new deep dive on the Bloomberg terminal, written by Robert Lee from Bloomberg Intelligence, who joins us now. Robert, thank you for being here. So this is a huge topic, a big report. What are your main conclusions?
Okay, well, I guess the main question is who's going to win from this within a China context, and that has to be the economy as a whole, because as defined by the so-called AI plus governmental strategy, China's looking to proliferate and deploy AI across every sector and every region of its economy. And obviously, given the export constraints in NVIDIA chips, etc., it's doing it at a far lower cost, using low-cost, computationally efficient models, using an open source approach to try and do that. So tying in with research from our colleagues in Bloomberg Economics, that stands to help boost economic productivity across the nation as a whole. But the key question is who's going to fund this, who's going to pay for it? Obviously, there is some degree of government subsidization in there, but I think a lot of the burden will be taken on by the private tech platforms, the likes of Baidu and Alibaba. So it's actually the shareholders of those companies that are effectively subsidizing this national rollout.
Robert, how has China managed to work its way around the NVIDIA export ban? Can NVIDIA actually ever gain a foothold in China?
I think that the boat has sailed, the stable doors closed, whichever cliche you like to grasp for. So it's highly unlikely, as things look at the moment, that NVIDIA will be allowed to export into China, particularly at a time when the government is doubling down on its push towards technological self-sufficiency, and at a time when the supply of domestic chips from Huawei, etc., is increasing. So yes, I think China has successfully navigated the issue so far, and with a rising supply of domestic chips, that is likely to be the direction of travel. And if you look at, for example, some third-party benchmarking services from the likes of LiveBench in the US, they show today that the performance premium for ChatGPT and OpenAI is only in the region of 10 to 11%. It's not an order of magnitude higher. It's, as I said, 10 to 11%, which isn't particularly high. And also the key question for investors is, does that really justify the substantially higher levels of CapEx that US firms are investing? Based on our analysis, Chinese firms are investing somewhere around 1/10 of the CapEx. To be fair, with some government subsidy coming in there, but still they're doing it on a real budget compared to the US.
So who actually stands a better chance of winning the global AI race?
I think, as your previous guest sort of alluded to, we live in a bifurcated world, sort of taking into account the geopolitical backdrop. So there are still many countries which are on very friendly terms with China, whether they're in Southeast Asia, in Latin America, or in the Gulf. So that creates a big export market for Chinese technology going forward. And as I said, the performance stats show that whilst America maintains a technological lead and certainly is the leader in AI accelerator chips, obviously with exemplified by NVIDIA, China's actually not that far behind. China's got high quality engineers. It has a 3-to-2 numerical advantage in the number of software developers it has. Don't forget, China's home to some of the world's biggest software companies. Again, Douyin and also Alibaba and Tencent. So it's a two-horse race. And I think within this bifurcated world, China will do well within that, within the export-friendly countries, and the US and the West will operate in a largely parallel universe. I don't think it's, again, we need to step away from this narrative of who's going to win. I think China, going again back to what your last guest said, primarily is focused on making money for this thing, which is why I think their pragmatic, low-cost strategy in trying to generate quick and easy wins within their economy makes an awful lot of sense. And I sit here in Hong Kong as someone who's neutral to all of it. I'm just looking at the facts and making logical conclusions based on what I see. So China's strategy, I think, makes a lot of sense from where we are at the moment.
Robert, thank you so much. Robert Lee there from Bloomberg Intelligence. Now, coming up, a 1-2 punch for the A320 as Airbus recalls hundreds of aircraft for fuselage inspections just days after an emergency software update for thousands of planes. Detail next, and this is Bloomberg. AirAsia, one of the biggest customers of single-aisle Airbus jets, said testing protocols for aircraft software need to be re-examined in the wake of the weekend glitch that required an urgent update. Tony Fernandez, the founder of the Southeast Asian carrier, said it was likely the software was not thoroughly tested.
Airbus were great. They gave us heads up. Christian Scherer called me straight away. There was a little bit of confusion on the actual problem. But as soon as we got that message, our team did an incredible job, and we were able to sort out 96 aircraft in about 24 hours. So we had no operational major delays caused by this software glitch.
How about the fuselage issue? What's your own understanding?
We saw the notice. I don't think it's major. It's a few panels that they have to fix. It's on impending aircraft. Again, I don't see a major delay. We haven't been given any notification of any delays caused by it. So, what appeared to be a massive crisis, I think through good communication, good crisis management, we were able to avoid a major disaster.
So just to be sure, it will not impact upcoming delays, and it's not impacting, the aircraft that have been recently delivered to you?
No. No issue on the panels. In terms of the software, after getting the full information, it was mostly a software downgrade, which our team were able to do per aircraft about an hour and a half. And honestly, my team did an incredible job, and I'm sure many, many airlines did that as well. So no operational delays.
We've seen a host of issues to do with supply chains, with engines, and now issues to do with fuselage and software. Do these issues shake your confidence in Airbus in any way? How are you assessing the reliability of Airbus?
Well, look, I've been one of Airbus's first customers in Asia. We have an order book of delivered about 250 aircraft, and we have another 350 on order. We're very, very close to them. We feel that they produce excellent product. Obviously, supply chain issues have been a problem, especially engines. But I think we're over the worst of it. And I'm hoping by 2026, even in AirAsia's case, we had to bring back 230 planes. Our numbers have been crippled by the fact that we haven't had all our planes in operation, in spite of having a fantastic third quarter where we delivered R1 billion of EBITDA. I think fourth quarter, we will have all our planes back. We had our last issues with GE. And I think for most airlines, 2026 should be really the end of all these COVID issues and begin to see some stability in the supply chain as well.
As you said, you're among the biggest operators of the A320s. I mean, when it comes to the A320s, it is the most used aircraft. Help our viewers understand how rare are these hiccups that we're addressing right now?
I think it's the first time in my 20-odd years of AirAsia that we received a global notification such as this. I've never received a notice where all 6,000 aircraft had to be checked. So it was the first time. It is a good warning to Airbus and its supply chain operators to test things out properly. But it seemed a very odd one that solar radiation affected the software. It's kind of bizarre for me. But, I applaud Christian Scherer for calling me personally amongst many airlines. That gave us a good head start. And I think, I applaud OEMs that actually go on the front foot and work with airlines quickly. It's been one of my biggest issues during COVID that many OEMs weren't proactive enough in helping airlines during this very difficult period. But I remain very, very confident and optimistic of airline manufacturers, especially Airbus.
Tony Fernandez there, the AirAsia chief executive, speaking to Haslinda earlier about the Airbus A320 and quality issues. Now, Airbus is still in the red after falling the most since April yesterday. The plane maker says hundreds of its best-selling A320 jets need to be inspected. Benny Camel, Bloomberg's managing editor for space and aviation, joins us now. So we just spoke to Tony Fernandez. What do we know, Benny, about the latest issue?
So the latest issue has sort of been trickling out after the software issue over the weekend, and that is that we have some panel misalignments in terms of the thickness of some of the panels on the aircraft. This is something that Airbus interestingly presented to customers last week. There was a gathering on the 27th with some information provided to customers there. This is a mix of planes. Some of them are already in service and some of them are still in some state of production. So all in all, just north of 600 aircraft that will require some sort of inspection. Airbus says that the vast majority they expect to be just fine, but there might be some that will need adjustments. And then the question really is, how detailed will that be? How complicated will it be? How arduous might this process be? And then as a result, how much of a delay might it create for the normal production line of Airbus? Those are some of the questions we don't know the answers to.
So Benny, exactly what kind of impact do we know this will have on Airbus's delivery targets? I think we've lost Benny. We'll get back to Benny with a lot of questions with the Airbus, of course, on the very latest, after we also spoke to Tony Fernandez. Now, the Bloomberg Markets Today team is also hosting a live Q&A today at 1 p.m. London time. Digital subscribers and terminal clients have the exclusive opportunity to ask questions on the UK. Join them to discuss how UK markets have fared this year and what could happen next. Now, talking of markets, there's stocks overall struggling for direction in this pretty fragile trading environment after a sell-off in cryptocurrencies seemed to be leading to a broader retreat of risky assets in the previous session. So what I'm looking at is a couple of things. First of all, look, if you look at Bitcoin, it did post a small gain amid a choppy session after slumping more than 5% on Monday. We did have solid demand at Japan's final 10-year bond auction of the year, and that seems to be helping steady bond markets after this heightened speculation of the Bank of Japan's interest rate hike yesterday, which definitely unsettled traders. So look, a couple of other things we're watching out for. Bayer, I think we have maybe a share price for Bayer surging as much as 14%, hitting the highest level since January 2024. This is after the U.S. Solicitor General urged the High Court to consider the German company's appeal targeting thousands of lawsuits baying its Roundup weed killer for causing cancer. So up next, we'll have plenty more, of course, from the U.S. Bloomberg Brief. That's up next, and this is Bloomberg.